Hey, Chris, I see you. Really looking forward to talking to you again. It's been such a long time. So I'm making you the presenter right now, buddy. My trading warrior brother, everybody, Chris Capre at Second Sky Forex. Second Skies, plural. Hi, Chris.
Hey, Dale, how we doing?
Oh, God, it's really nice to hear your voice. Great to talk to you.
You as well.
Go ahead.
No, please. I was just saying, I wonder how you've been. It's been a while since we've connected.
Yeah, well, I'm still breathing in and out and, doing my best every day to build up and edify traders. And I know that's been your mission for a long time. Consider you a contemporary of mine and really looking forward to your presentation today because, I've always taught and said it's really not your method, it's what's in your head that really matters. So great to have you back with us, Chris, and you could take it away and we'll have a conversation.
Sure. Well, so I kind of came into this ad hoc in the sense of like, there were no kind of pre-scripted questions that you'd given me or anything.
Yeah,
and so,
I never do that. It's all spontaneous, brother.
Which is cool. So I feel like I could talk about anything when it comes to trading, but I'd like to take a few moments to kind of talk about, you kind of said it's all in your head. And I think this is probably one of the most underappreciated aspects of trading. It's not exactly the sexiest. If we were to talk about in terms of like what's sexy when it comes to trading, charts. Traders want to look at charts. If you were to do 100 webinars, I'm willing to bet that people would be very happy with seeing 97 webinars on charts, maybe 2 on mindset and 1 on risk management. In terms of sexiness, risk management is the least sexy it is. It's like, Margaret Thatcher on a really cold day or something like that, as the expression goes. So
yeah. Without that one though, Chris, risk management, it may not be sexy, but if you're trading without it, you could be castrated and never have sex again.
Exactly. So, but at the same time, the bottom line, it comes down to this, which is that a lot of people struggle with trading. And, if you were to take 1,000 people and they open an account on January 1st, 33% of them are probably going to be in the money at the end of the first quarter. But when it comes to the end of the year, it's going to be about 7%. So you're talking 70 people out of 100. And the question is why is it that 33% of the people can be making money after the first quarter, but then the number drops almost fivefold when it comes to sustained discipline and practice? And it really comes down to us in the sense that as human beings, we're not wired to be traders. We're not wired to be successful traders. There's nothing part of our human evolution or our brain that is wired to make money trading. Our evolution wasn't dependent upon us looking at charts and making decisions on like sugar futures or what's going on with the euro dollar. None of this was required for our survival. And the brain that you, me, and everybody has today when we sit in front of the charts, it has evolved to be wired to actually be a bad trader. And that's the reason why people struggle so much. Because
of our emotions, Chris?
Not just our emotions. Emotions would be a huge byproduct of our conditioning, of our reactions to certain situations, our responses to certain situations.
Well, could I take a guess on your thesis of why people could have a great quarter and then their performance begins to slide?
Please.
Number one might be hubris. Also, the more important one that I've seen happen, not only to others but to myself, is that when you're doing well, you have an attitude that, oh, I'm trading on the house's money, and you don't treat it the same way when it really has become your money, and you should respect it and protect it as much as your initial deposit on your account. So have you seen people lose their discipline because they're up and they feel like they could be, they're okay, and they're up and they don't have to really maintain the same type of rules?
Yeah, this is an excellent question. In fact, it's a very good point that you bring out. So, you know, you've probably heard of the term name Nick Leeson or the London Whale, or you've probably heard of a lot of these situations where traders had blown up massive amounts of money, where they blew up entire banks or institutions. Every single one of those traders, before they kind of went into that massive loss, was on a really large winning streak. And that's part of the reason why they were given more money. And so the way our brains are wired, and men are more susceptible to this than women. That's why in many cases women can often make better traders, and I'll get to that in a second. But men naturally have more testosterone. We all know that. And testosterone is a neurochemical. I used to. It's constant. It's happening to all of us, so it's part of the deal. So what happens is that you need the neurotransmitter of testosterone to take risk. Without that, you will be risk averse. Men have more testosterone by default, and so that makes us much more willing to take on risks and accept risks. Now, what happens to your brain and everybody's brain here that's listening, when they are on a winning streak, testosterone tends to increase in the brain. And that's fine up to a certain point. Once it gets beyond kind of this certain point where it's no longer at healthy levels, then what you see is traders taking larger risks than usual. They start to abandon their risk management. They start to feel overconfident. Too much testosterone will make you feel overconfident. And eventually it gets to a point where the risk and the way they're trading is so kind of disproportionate to what they actually should be doing. Eventually that blows up. Eventually the winning streak ends. And because they've kept stacking up risk and risk and risk, it ends up creating this kind of both psychological and neurological crash in their brain, and their chemistry gets all off at that point. And so if you look at most people who go on winning streaks, they tend to experience this increase in this testosterone, and all of a sudden the risk management that they were using to get that winning streak starts to go away. And I'm willing to bet any one of your traders that's listening to this right now who's gone on a winning streak has probably experienced something like that. And if they have, that's their biology and that's their, you know, kind of neural wiring taking place. And so it's also you also have to look at it from a perspective of self-image. So everybody kind of has what I would call a comfort zone. And that zone is where they are comfortable maintaining a certain level of performance. So for example, if I'm a golfer and I have a handicap of plus 10 or something like that, if I'm on the golf course with 3 other guys around me who all have handicaps similar to me, then I'm going to feel relatively comfortable. I'm going to be within the zone of what I'm used to performing at. But if you were to change those guys out and swap them in with Tiger Woods and Rory McIlroy and 3 of the top players who are professionals, I'm going to start feeling outside of my comfort zone. And getting outside of your comfort zone a little bit is a good thing. It's where you start to kind of feel this friction. You feel a little bit more nervous than usual. Maybe you feel a little bit on edge, but yet you still feel like you can kind of control your emotions to some degree, your thought process, your mental execution. When you get too far outside of that, then what happens is that kind of ability to control your mental execution goes away. Your self-image starts to say, look, I'm not used to making $10,000 a pip. So, you know, maybe my mortgage is $10,000. Well, if you're in a trade and you're looking for 100 pips and it's $10,000 a pip, you're well outside your comfort zone. And that's going to throw your brain and your psychological processes off and your mental execution off tremendously. So
do estrogen levels increase when you choke? I mean, it's the opposite of testosterone. It sounds like, you know, biochemistry at work here. So, yeah, when you're around guys that are too far above your level, makes you nervous and you choke. But I agree with the point that you can also rise to the level of people around you. I advise people to surround themselves with traders better than them. That's how they learn. So am I giving people the wrong advice that it's just too much for them?
No, I don't think so. I think I think the best way to do it is to surround yourself with people who are going to be better than you, who are going to push you in your comfort zone outside of it, but they're going to do it in a gradual way. You know, for example,
Okay.
I don't know about you, but I don't I don't go jogging as an exercising thing. But let's say I was a jogger, and let's just say I'm used to jogging 4 times a week, a mile a day. If you all, and I have a jogging partner who runs about the same amount. If you all of a sudden change that jogging partner for someone who is used to running marathons and they're running 20 miles a day,
Okay.
I'm going to fail miserably, and then that's going to actually have a negative impact upon me. So I think the key is slow, gradual increases in somebody's kind of skill
Okay.
level and ability. And you're going to see this if you were to go to golf and you were to try and learn golf, they're not going to just put you on the toughest course right off the bat and make you do the toughest things possible. No, they're going to
True.
slowly increase your skill level. I restarted taking archery lessons. I used to be a competitive archer, but then I had a snowboarding accident and I tore a nerve in my arm. And so that was a long rehabilitation process. So now I'm back. And I'm not going to be shooting on the smaller targets that I'm used to right now. I'm starting on the big ones, and then the targets will slowly get smaller over time. If you were to go to any sport, any skill, learning piano, anything like that, it's generally recommended that you kind of challenge yourself to the level of where you're at and then slowly expand that over time. And in terms of surrounding yourself with traders, that's actually a good thing because we have this thing in our brains called mirror neurons that if we see somebody else doing something, we're more likely to repeat that action successfully. So for example, they've tested this. Like somebody goes up to bat and let's say I'm the guy on deck. If the guy on bat strikes out, I actually have a greater probability of striking out because my brain is kind of mirroring my peers around me. But if I'm, the guy on deck and the guy at bat gets a nice hit, I am much more likely to hit the baseball and get a good hit because my brain will want to kind of mirror that kind of process. So I think you're right on track that we want to surround ourselves with people who are doing what we want to do at a higher level. We just don't want to overdo it because if we get too far out of that, we can kind of have a pretty big crash and a lot of disappointment. So the key is
So
slow, gradual steps.
you make a great point with all these metaphors, and I see a commonality is that people want immediate gratification, Chris, and they don't want to accept the fact that to become good at anything takes time. You can't
Yes.
learn experience. It only comes with the passing of time. And people are begin to over leverage themselves or begin to trade live too soon. And it's really a lack of patience of knowing that, even to become a carpenter or a plumber, you're an apprentice, then you're a journeyman, then you're a master. And for example, let me ask you, Chris, at the beginning of your career, how many years did it take you to make breakthroughs to where you started to become consistent?
Consistency didn't really hit me until year 2, year 3. I actually had an unusual start. When I started, I went on a 6-month winning streak. I had turned 3,000 into 83,000 in a very short period of time, and some of that was just kind of my mindset was in a really good place when I started trading,
Mm-hmm.
and I was a little fearless. It was a combination of fearlessness and a little bit of naivety, risking too much. My very first trade was a dollar Swiss trade, and I had a $3,000 account, and I took out a standard lot on it, not knowing anything about risk management. Luckily, that first trade made 124 pips, and back then, based on the pricing, you're talking about a $1,200 trade. So,
Yeah.
the $3,000 account within a day was 4,200, and that kind of winning streak with a certain sense of fearlessness and naivety worked out great until risk management really started to come into play. And I kind of had that winning streak where the testosterone was building, and pretty soon I was trading 10 standard lots, which you should not be doing on an $83,000 account.
Right.
And all of a sudden I had my first big loss, and I literally lost $25,000 in 15 minutes, and I lost $50,000 that month. And I experienced that personal crash that I talked about, that I read about in books. I experienced that firsthand. And that took me
How'd
about
you come out? How'd you come out of it, Chris? Did you take a break? Sometimes stepping away to reassess is the best way to stop a hemorrhage. How did you manage yourself through that drawdown, and what was your thought process in being able to make a comeback?
Yeah, the smart thing would have been to take a break. Unfortunately, I didn't do that. I was a little too stubborn, I guess. And so pretty soon I just kept losing, and it turned into a 6-month losing streak at that point. So the turning point for me one day was, imagine having an account that starts with 3,000 and 6 months later it's 83,000. You feel high, you feel on top of the world at that point. And then blowing $50,000 in a month and then slowly bleeding back down to about $20,000 over, the next several months. I was depressed. I'll admit I was totally depressed at that point. I was in a very bad state of mind. I was sitting on the couch just kind of staring out the window wondering like what the heck happened. And I didn't know. And this is back in the early 2000, 2002, 2003. So there were no trainers or educators out there. Back in 2001 when I started FX trading, there were 6 websites on FX. Now there are millions. So
yeah,
it was kind of Wild West back then, and there wasn't any resources. So one of my friends had come in and he just looked at me and said, dude, you look really bad. He's like, you need to get out of this. You need to do something. And so I went for a walk in the Bay Area. It was raining. It was winter. It was kind of cold. And, Bay Area winter with rain is it's just kind of cold and wet.
Yeah, you had to stay away from razor blades.
Yeah, exactly. So I looked so bad that as I was walking down the street, I had passed a homeless person, and the homeless person had stopped and looked at me and said, dude, are you okay? Now, when a homeless person asks you if you're doing okay and you have a house and a home and everything like that, you must be looking pretty bad. So I just said no, to be honest. And so we talked for a few minutes and I kept walking. And I went into this kind of botanical garden they had in Oakland. And I was kind of distracted by this person off in the distance who was doing Tai Chi. And here it is, the rain. It's probably 40 degrees. It's cold. It's gray. And I'm cold. And they're doing Tai Chi and they're totally undisturbed. And you can tell they're a very advanced Tai Chi practitioner because they're doing moves and sequences with a certain sense of grace and precision that, was not normal of a beginning practitioner. And I sat there, just watched them, and I was like, wow, here they are in a very unhospitable environment, yet they're so focused and so concentrated and so graceful at what they're doing. And my mind kind of woke up out of my stupor and said, look, you are going to experience dark times if you want to do trading. You're going to experience challenges. You're going to experience setbacks. This person is doing what they're doing because they have stuck within it, good or bad weather, because they kept to the discipline, good or bad weather, good or supportive conditions or unsupportive conditions. They stuck with it. And what I'm seeing today is the result of somebody who's been practicing for decades. And I said, look, if I'm ever going to want to be that in trading, I'm going to have to weather these unhospitable situations, these unweatherable situations. And so I kind of picked myself up and said, okay, I need to, really look for training in this. I need to train in this. And so I started to seek out training, and F.A.C.E had a course back in the day. It was like one of the few courses out there. And I took the course, and then my trading started to improve. I started to get more feedback on risk management and how to kind of really manage things and how to manage my emotions and how to really understand the charts. And then 6 months later, I had showed them my trading and it had improved in everything I had done. And it turns out they were hiring brokers at that time. And so I applied, and literally the day after the interview, they called me and said, we want to fly you out to New York. We'll cover your travel. We'll cover your housing. We will train you, and you're going to be an FX broker. And that was kind of the big change for me at that point. And, with that point, with all the training I was getting at the brokerage, I had started to break. And so it was sort of serendipitous, and I was very fortunate at that period of time. But, it doesn't mean I haven't had losing years since then. I've had a couple
Yeah, and
since
you
then.
were also fortunate. I mean, didn't you have any epiphany when you're talking to the homeless guy? Like I say, when the darkness of depression begins to creep in, turn your eyes to the light of gratefulness.
Yeah.
That you were, this guy's asking you if you're okay, and you're not homeless. You have a nice place. You have food on the table, and that sometimes we take it too seriously, even a financial setback, because there are bigger setbacks in life, Chris. And isn't trading something that we do, not who we are?
Yeah, that's a very good point, which is that we tend to have, and this is part of our brain's wiring. So we actually have, you, me, and everybody listening to this webinar right now, we have more neural networks and neural cells devoted towards the negative than the positive by a ratio of 3 to 5 to 1.
Wow.
So, yeah, so we have more cells in our brains that when we experience a negative stimuli, we're going to have more cells light up and more regions of our brain light up than positive. And that's partially because of that whole survival thing.
Yeah.
You look at our
Fight or
fight,
flight.
fight or flight, and also, if you think about it, most of our human evolution up to the 20th century, the our existence was devoted to survival, resources, shelter, communal relationships. 10,000 years ago, we humans, you and me and our kind of more less evolved species, were dying at a rate of 1 out of every 8, just trying to protect our resources, our family, and find food and survive. In the 20th century, that's now 1 in 100. But yet we still have the neurological structures as if we're dying off at a ratio of 1 to 8. So when we have 3 to 5 times more neural networks and neural cells dedicated to
I don't like that
positive,
R&R.
yeah.
How do you check that risk, that R&R ratio, buddy? Can you?
Yes, absolutely. If we couldn't change it, then we would be doomed as a species. So there's something called neuroplasticity, and that's our ability for our neural cells to form new connections, to form new relationships, to connect to different cell structures, to learn new languages, to learn new skills. And
is that NLP, like, writing things down and repetitive behavior to create a new paradigm?
kind of. NLP, in the neuroscience community, and that was my focus at the university, was neuroscience, particularly human learning and memory. How do we learn? How do we evolve? How do we think? NLP is kind of like an offshoot of neuroscience. It's some people that kind of wanted to create different methodologies to create the ability to have certain outcomes and certain mental execution. And the neuroscience community hasn't quite embraced it the same way. We look at something called self-directed neuroplasticity. So there are 7 major components that will cause us to wire new cells in our brain. 4 of them are really important, and 1 of them is crucial. So the 4 of them that are most important, you can remember the acronym FIRE, F-I-R-E. So it stands for focus, intention, repetition, and emotion. All of those will increase our ability to wire new neural structures more powerfully. And the one that's most important out of all of them is repetition. You will never form a new neural structure in your brain without repeating something over and over and over again. Repetition is the language of the brain in terms of how the brain wires itself. And so,
And what's the E again, Chris?
emotion. So emotion can be used to actually help change the way you think, the way you trade, the way you perform. A lot of people think of emotions in trading as this, it's in this one bucket, catch-all bucket, it's bad. But there are actually positive emotions, such as contentment, happiness, enjoyment. People can't look at emotions in trading as just every emotion in trading is bad and we need to be like a robot like Spock.
Yeah, I've heard that. Be a machine.
Yeah, and that's the whole check your emotions at the door. Well, that actually is going to inhibit your growth if you do that. What we need to do is, through self-directed neuroplasticity, use this kind of F.I.R.E., these focus, intention, repetition, and emotion, to wire positive habits into our brain. The best way to think about this.
Is that done like through imagery, Chris? Put a picture of the house that you're dreaming to live in or the car you want to drive, and there's some type of subconscious emotional reaction, attachment to it, and all you have to do is you don't have to be consciously figure out how to get there. You just have to know where you want to go.
You're kind of talking more along the lines of The Secret and The Secret. And if you think about it, if The Secret was so powerful as is, there would be a lot more people with BMWs and mansions and things like that, and it just didn't work. And that's because you can't just visualize the outcome. You have to visualize the mental execution that will produce that outcome. So self-directed neuroplasticity would be specifically directing your mind and your thoughts and that kind of self-talk that we have to ourselves towards positive outcomes. So for example, let's say I make a trade and the trade doesn't work out, but I did everything right. What would you say is the most common reaction that an inexperienced trader will have to that trade not working out? Even though they did everything right, even though they followed their plan, they executed good risk management, what do you think is the most likely outcome of an inexperienced trader in that moment?
They're still critical of themselves because it wasn't a positive outcome.
Yes, and that's self-directedness neuroplasticity going in the wrong direction. They're criticizing based upon the outcome. But in actuality, they did the technique right. They followed their plan. They controlled the risk, and they executed it. You and I both know that trading is probabilistic. And so just like a poker player knows that just because they have pocket aces pre-flop doesn't mean they're going to win their hand. They're more likely to win that hand, but they could also lose a lot of money on that hand. And so the same thing for traders. We have to look at trading in a probabilistic framework in the sense of look, if I take this exact same setup 100 times, what's the chance that I'm going to make money over 100 times? I may lose this trade right now, but if I keep taking this trade in this structure, in this kind of pattern over and over again, it's going to make money. So if this one time it doesn't work out, self-directed neuroplasticity can come in and say, look, I need to focus on what I did correct, and I need to reinforce that and think about that after the trade. Because when I reinforce it,
tell people to journal these things, Chris, because when you write it down, it's more powerful than a thought, and that's one of the benefits of journaling.
Yes, and there's a reason for that, because when I am writing something down, a thought, versus just thinking it mentally, I'm actually activating more neural structures and more nerves in my body.
Okay.
And so we're employing more of our nervous system and our brain when we write something down. So my training to students is, look, if you are just basing your whether you did everything right or wrong based upon the result, you're going to have a very haphazard learning process. However, if you reinforce what you need to, whether you hit the target or not, you're going to slowly start tuning your mind and rewiring your brain towards the positive. If you have 3 to 5 neural structures, more neural structures towards the negative than positive, then I need to, at a 3-to-1 ratio, direct my mental thoughts at a 3 to 5 times greater rate than I'm doing it now, so that I can put those things in balance. And so, that's the training that I teach people.
So the secret is, there is no secret. It's work.
It is work. As I mentioned, I just started archery again, and this is my second time back. And keep in mind, when I left archery, I had already won 2. I had medaled in 2 out of my first 3 competitions, and I was shooting pretty consistently within the yellow circle and maybe some on the fringe on the red, and very rarely on the the blue as it expands out. My first time back, I was mostly on the blues and the red, and I was very lucky to hit the yellow. The next time back, I'm a little getting closer and closer to the center, but I'm still aware of that archer I used to be,
Yes.
that I could consistently hit the yellow, but I'm not doing that now. And there's a lot of things I'm doing in my shot, in my technique, that are what I would call on the fringe of my awareness. Like I know I'm supposed to be doing it, but I can't because the muscle memory isn't there yet. The skill's not wired subconsciously. So
Okay.
my current teacher, he said something, and it's the same way I approach trading. He said, look, for the next 1 to 2 months, don't give a shit about where your arrows land. Just focus on your technique. And you do that, you get the technique down, and the arrows will start landing where you want to. And he's totally right. And I know that because, in my training of archery over 2 years, my other teacher was like that. And he's like, look, you're not even going to shoot your first arrow for the first 2 weeks. And if you were to go into a Korean archery system, you will not actually shoot a live arrow for 3 months.
Wow. Yeah. Yeah, the Koreans, a lot of people go there to train for many things. Let me tell you something. You may be in the yellow right now, but this interview, Chris, with you about trading psychology and looking inside, inward introspection was a bullseye. So what a great talk. And next time, let's not make it as long a period between them. I think that
For sure.
your ideas, your holistic approach to teaching people how to trade is great. And, if you want to show your website now and how people could, reach you after hearing you either live or on the recording later, why don't you take the opportunity to do that now?
Sure. So I have a website. We've been around for 11 years now. It's called Second Skies Forex. And we have really one goal, which is to change the way you think, the way you trade, and the way you perform. And everything the way I teach, we're going to start looking at some charts very soon, but everything in terms of the way I teach is all centered around my training in neuroscience. I've been a Buddhist practitioner for 18 years. I've been meditating for 18 years. I did a 1-year meditation retreat. I just completed a 1-month meditation retreat, and everything I teach is backed upon neuroscience and my personal experience. I'm not teaching something that I learned conceptually. I'm teaching things that I learned and experienced personally over the last 18 years. And our goal is to we really want to change the trading education industry because I think it needs changing. The barriers to entry now for somebody to become a teacher or mentor is nothing. You just put up a website, create some sort of story, and that's it. And as long as you have good marketing, you're going to reach people. And I think the trading education industry needs to change similar to what you're doing. I think you are doing some of that right now, which is that the whole idea of just putting out a bunch of videos like here's a video course or here's a book, go do this and then go start trading, that model doesn't work. And if it did work, that needle of the 7% profitability would be changing. When I started, there were 6 websites. Now there's 1 million plus websites on FX. So we've had a huge proliferation of training and education, but yet the needle in terms of profitability hasn't moved. Why is that? There's only 3 possibilities. There's a problem with the education, there's a problem with the trader, or both. And the answer is both. And so I feel like trading education now needs to shift more towards a combination of mindset and skills, that we need to focus on teaching skills and not just strategies. And that whole repetition I was talking about, that the language of the brain is repetition. We need to put students through thousands and thousands of repetitions. There are no flight simulators for trading today that will put you through those repetitions. So imagine you and I are trying to learn how to fly a plane, but there's no flight simulators. What do we do?
Yeah.
And that's, I think what you're doing is excellent because you're giving people a live environment to really kind of go after what's important. You're going after mindset and you're trying to tell people, hey, there's many ways you can make money trading. That's why you bring all these different speakers on. And the bottom line is there are millions of ways to make money trading. There are millions of strategies. The current teacher that I'm learning archery with, he teaches a slightly different technique than my teacher in Argentina. But because I understand the teacher-student relationship, even though I'm like, wait a minute, I wasn't taught this way. I just let it go completely. Like, look, I trust what you're teaching, and whatever you tell me to do, I'm going to do 100%. And, it shows me that there's different techniques to shoot correctly in archery, and the same thing goes for trading. I've seen all the speakers you come on, and they all have different perspectives. And what it should be communicating to people is the perspective or the strategy. Don't get so focused that there's one way. There's many ways you can make money trading. Find the one that's most natural for you, but really spend a lot of time on your mindset and the way you think about trading. Because if you do that, then you're going to give yourself the skills that will work in any environment. And so, and you're constantly, through repetition, you are doing these. It's amazing the pace that you're doing these interviews. I wouldn't be able to maintain it, but through repetition, you're coming to people with repetition again and again and again, and you're repeating it into their brain, and eventually it will stick. And so,
thank you.
I feel like the trading education industry needs to change. We need to kind of start shifting our focus towards the quality of education and the repetition and how we teach. And so that's our goal, in Second Skies Forex, change the way people think, the way they trade, and the way they perform. And so,
what a great presentation.
You want to look at some charts now?
Yeah, you want to touch on a few views that you have? Sure, go ahead.
Okay, so let's start with dollar yen. The dollar was beaten up for a long time. You and I, have seen the dollar just get beaten up for pretty much all the beginning of this year. I think what we're seeing now is we're seeing a little bit of a relief rally in the dollar, and the one that I'm most focused on is the yen. And so, to me, the way I approach trading is that when I look at a chart, I don't care about the fundamentals. I don't care about sentiment or positioning per se as much. The bottom line is this. The price action we see on the chart is a result of one thing, activated orders, which is called order flow, activated order flow. And people make trades in those orders based upon information, and the information can come in a technical perspective. It can come from a fundamental perspective. It can come from a flow-based perspective. Most bank traders are watching the flow of what's going on, and then they're making their orders based on that. But the bottom line is all trading, all orders are activated based upon information. And that information has to get translated into an actual order. And when it gets translated into an order, the overall proximate driver of price action is order flow. And so when we look at price action, we're looking at the dominant order flow in the environment. And so I trade price action from the perspective of our goal as traders is to try and use structures and patterns to understand what's going on with the order flow in the environment. And when we do that, we can align ourselves with where the dominant order flow is. And so that's kind of my framework for how I approach it. And then at that point, I go through kind of a three-step process of looking at three different structures, three different types of order flow and price action. And then that kind of communicates to me.
Love that number 3, completion. In fact, I don't know. I mean, earlier in the week, I saw this as a 3 drive to a bottom formation. I don't know if it was order flow. It was just based upon a continuation of the market trying to shake out people trying to bottom pick it until the 3rd drive, which kind of completes a pattern for me. So if you did nothing, if you were flat right here, would you do nothing and wait for a sell zone at your blue line up there on 32?
Yeah. So as a trader, I am as a human being in a relationship. I'm in a monogamous relationship. But when it comes to trading, I believe in polygamy, which is the sense of I am not I am not married to one bias of long or short. I'm looking at both sides of the market, and I'm always thinking in if-then scenarios. So
Right.
at the current location, I would not want to be long or short at this current location. In terms of wanting to be long, if you look at that kind of 3-drive pattern that you're talking about, what do we see right here? We kind of see a false break, and it's a pretty impulsive counter trend move. I mean, come on, the dollar yen, since January 1st, the dollar yen's been selling off 2 out of every 3 days. But then as we start to get closer and closer to that 105, we start to see more bulls start to come back in. And when you break out to new lows and then have an immediate counter trend reaction, that usually signifies a false break. And so to me, this was a false break of the 105.23 structure, and it's been pretty strong buying since. So if I'm going to be long, I want to be buying here or want to be buying here. And if I'm going to be selling, I'd like to be selling around the 108, 108.28. I think dollar yen could rally maybe even all the way up to 110. But then I think at that point, it's probably going to run into some medium-term sellers who are going to say, okay, your relief rally and your completion at, this kind of counter trend play is over at this point. So I actually, at the beginning of the year, told my students that I did my top 10 trades for 2018, and one of them was that dollar yen's going to 105 and 100. And the first part of that's already happened. I think what we're seeing right now is the dollar shorts kind of got just too overextended. We saw a lot. I mean, if you look at euro dollar, you look at anything that was, against the US dollar, the dollar was losing ground since January 1st.
Yeah, let's look at euro. I think you had it up there.
Euro dollar is holding a little bit better than dollar yen. We're not seeing a massive reversal of any structure, but we are seeing it kind of struggle here. So to me, we are in a kind of we're kind of in a wide corrective structure at this point. I wouldn't want to buy euro dollar until here, and I wouldn't want to sell it until here. And if euro dollar breaks it here, that's fine. I'll buy it back up here. I actually in December had called for euro dollar to hit 129 this year, and I still think that's a very likely probability, but I'm not going to be married to it in the sense of if the price action changes, I need to change with it. I need to kind of be kind of like a weatherman in the sense of like, look, if it's snowing outside, I don't want to be wearing my spring jacket.
WD Gann, buddy. If you don't learn how to change your mind, you won't have any change left.
Yeah, and one of the better traders of the 20th century, WD Gann. So I look at euro dollar is it's kind of losing. I think there's kind of a tiredness in terms of the bullish support that it's had. It's just not finding as much bullish interest as it did before. There was some pretty strong buying off this level here and here, but look at what's happened since then. You're not seeing the enthusiasm for buying the euro dollar right now. So I think traders got to stand aside on euro dollar right now, and they got to wait towards the 122, 121, and then if it breaks this, wait till your 120.65 before buying. But I'll take both sides of the market. I'll sell it up here and I'll buy it up here until this structure breaks. This structure is communicating, look, there's no dominant player, but there are people who are saying it's overvalued here and it's undervalued here. So we need to trade.
It's a battle zone. It's a battle zone. Yeah. What a great interview, buddy. I'm telling you, Chris, I'm getting very nice comments in the room. Comments like, what a great interview, dead center, bullseye, excellent interview, coach, good to be reminded of these true facts. Thank you, Chris. Probably the most interesting interview I've ever heard on ForexAnalytix, except for the bit about evolution, which I don't believe in at all. The rest was fascinating from Manny. So, I want to thank you for your giving spirit, Chris, of coming in and reminding people of things that they don't think about enough and opening people's eyes to things they've never even considered thinking about. So
that's huge.
So have a great spring trading season, Chris, and
you too.
Let's not make it a few years. Let's get back together maybe in late summer, fall, and see what's happening again. And I wish you and everyone that you teach, here's your words, all the success in the world. May pips rain down on you and them.
Oh, I appreciate it. And, I just want to say, I really appreciate what you're doing for the trading community, and I think you're doing a special service, and I'm just constantly impressed with the pace and the volume and the exposure that you're doing. I watch it from the sidelines, and I'm sitting there, I'm like, he's older than me, and he's out hustling me. I have no idea how he's doing it. I think what you're doing is excellent, and if I can leave people with one last thought, it would be this, which is that there will never be, at least right now, there will never, and there has not, and there will not be a bestseller called Get Rich Slowly. All the bestsellers out there are Get Rich Fast. And if you look at people like, who's the wealthiest man on the planet right now? Jeff Bezos. You should see some of the images of him in his early years.
In the garage.
Starting in the garage, in the factory. There's a great picture of him where 60 Minutes did an interview with him in '99, where you go into his office and it just looks like this crazy. It's like in some manufacturing warehouse. He has this plastic sign on the wall that's like crooked, and it says Amazon.com, and his desk is just cluttered, and he's got boxes of shipments around his desk, and you're looking at this guy and you're like, no way is this guy ever going to be successful. And he didn't get to be number one in terms of wealth on the planet by focusing on getting rich fast, because the people that do that are trying to go after that portion of your brain that's not evolved. They're going after that button. And the thing about it is, if that worked, there'd be a lot more people who are millionaires right now. And that's not what's happening. Your goal should be focus on skills, focus on the mindset. Just like my archery teacher said, forget the first, hitting the target the first few months. Just get your technique down, and then eventually you'll be able to hit the target at will. And I guarantee that's the same thing with trading. Focus on what Dale has been talking about through repetition, through skills, through patience, building this mindset over time. And then pretty soon you'll find yourself, wow, I'm actually trading pretty good. And that's because you've wired it into your brain at that point. So go reverse that negative 3-to-5-1 ratio, or 3-to-1 or 5-to-1 ratio in your brain, and you will start to change not just the way you trade, but the way you live your life.
Beautiful. So don't quit. People say, Chris, when you're trading, don't quit your day job. I say, don't quit your daydream.
Yeah.
Jeff Bezos didn't. You didn't. Many didn't. So again, Chris, thank you so much for being here. You're my trading warrior brother, and I wish you continued success. And you're a great thought leader in our FX community and industry. So
I appreciate it. Well, good health and good success to you as well, amigo. I really appreciate it.
Thank you, Chris. That was Chris Capre, everybody. So that's a wrap for Thursday. I'm not going to be here, but Blake has a great testimonial interview tomorrow. And everyone have a great Passover, Easter.
Thank you.
And I'll see you on Monday for the 1-year anniversary of F.A.C.E. It's been 1 year and 200 interviews later. We're putting it in the books. So
there's got to be an award for that. There should be.
Well, you know what the reward is? It's a blessing to, help others. And that's why I always say, don't just count your pips, count your blessings. Mm-hmm. And thank you again, Chris, and everyone have a great weekend. Thank you, team. Thank you, F.A.C.E.
Have a great holiday.
Thank you very much, Chris. Adios, brother.
Adios.